So many interesting parts here. I talked earlier about Melvin, which was the center of this, of course, run by Gabe Plotkin, the future of that firm, I think, in some doubt. And then the role of Citadel here. I heard they blew out some people yesterday, but Citadel's all over this thing. I don't know if you followed that part of the story at all, but it's fascinating because they're in so many of these markets on so many different sides of it.
Yeah, and it's interesting just looking at the boards just in the last hour or so. People have turned their attention to Citadel almost for blame for what's going on with Robinhood, their inability to trade. One distinction that I think is important for our viewers to understand is that there are actually two Citadels. There's the Citadel, the hedge fund. That is the hedge fund that, quote unquote, bailed out Melvin, the one that helped participate in that $2.75 billion emergency rescue financing that Melvin obtained earlier this week. But then there's also Citadel Securities. That's their market maker. And what they do is they do pay for order flow from Robinhood. So they're not front running. If they are, it's illegal, but I have no indication to believe they are front running trades. I just want to make that extra super clear. Two separate companies. There's a Chinese wall between the two. There's supposed to be a Chinese wall between the two. Ethically, legally, there needs to be a Chinese wall between the two. Front running is illegal. If someone is doing that in the market, that is an illegal move. And so I can't speak to whether someone is or not. All I know is that is not something that is part of their business model, shall I say. So that's one thing that I think is really interesting going on, that you are still seeing a lot of targeting toward Melvin in particular. You're seeing a lot of conversation on these platforms about taking down hedge funds, keep pushing on that gas to make sure that these guys really suffer here. And it's just remarkable that it's really turned into kind of an us versus them mentality. One thing, David, that I think is really interesting and gets lost in the narrative of this whole thing is that hedge funds are not all equal. They're not all the same. There are different types of hedge funds. So the ones that are really feeling the pain right now are the fundamental long-short equity firms. That in particular is a slice of the hedge fund community that is really, really feeling some pain. There was a prime brokerage note sent to clients from Goldman Sachs that said Tuesday, not yesterday, but Tuesday, the data's a little lagged, was the worst day for this community on record. They had negative alpha of 2.5%. But quant funds, on the other hand, they can benefit from this kind of thing. They are traversing these forums, and they're monitoring it.
Shepard Smith here. Thanks for watching CNBC on YouTube.